Hello, how's everyone doing today? Thank you for joining me. So, I want to have a quick chat with you guys, a quick talk regarding the stock market. So, there's a couple things that we need to discuss, parcelate, and analyze. There are going to be some videos that are going to go out next week regarding market analysis and economic projections. However, I do want to say something that needs to be said. Okay. So, right now, what I believe and what I see in the future of the stock market is that we are going to go back into the tech sector plays. Now that's going to be the play at the end of the year. The only question is what tech stocks. Now the amazing answer to that question is it's going to be stocks that generate free cash flow, stocks that have a moat, stocks that no matter what federal chairman Jerome Powell decides to do with the economy, those stocks, they don't care. They will continue doing their work. They will continue to provide value to their customers and that of their shareholders. So those are the stocks that you should be looking at right now. So just to give you a quick example, back here on February 11th, here the proof is in the pudding. Let me just back on February 11th, and there's other stocks too that we hit. This is on our private Discord channel. Shout out to Bloomberg, Market Watch, NASDAQ, Benzinga, Yahoo Finance. We've been featured on them regarding our platform, 3-day free trial, link down below. However, if you look at this stock that I said, no, please note that this company reports in Canadian dollars since I am from the United States, this converted to the US format. I said that it's going to take time for Wall Street to catch up, but this is an undervalued stock. We're able to catch this at around $4 to $5. Now, this is energy. I was talking about energy in February, even a long time ago. Right when Warren Buffett, even before Warren Buffett sold out of his OXY shares, right? Back in 2020, he recently bought in. But if you look at this right now, if you scroll down, today we just initiated a sell rating as it just passed our 750 price target. And it actually was 10 cents away from the base case. Uh, so what does that tell you, right? So we're starting to see a peak. I believe in energy. Energy could go up even more. If you look up the heating map system that we have here, you can see, and I hit it here, healthcare, energy, utilities. That's what was green today. And I think if one of these were going to give, I think it would be energy, right? Because it has been on a high end. So what type of stocks? Amazon, Microsoft, Apple, exactly. Those are the stocks that you want to look at, but more so Facebook. Facebook has been beaten down. More so PayPal. PayPal hasn't beaten down. Now, Apple has been beaten down, but I think Apple is going to see more of a beatdown in June because a lot they strategically, and I'm experiencing this, released their Mac Studio, and it's all coming in May and June, right? I think no new orders are going to be coming in. I think that they're going to have a decrease in the whole supply chain problems and everything happening in China. I think Apple's going to get hit. And we may even see Apple go below 150, right? So what I'm saying is stocks that are under the radar, stocks like Crowdstrike that are generating free cash flow. In fact, here, let's just whip it out here. If you look up, stocks like CrowdStrike, they just started generating a free cash flow, 12, 293, 404. These are in millions, right? The revenues are perfect. And this free cash flow translation is going to translate into having a positive net income. Let's take a look at PayPal. If you look at PayPal, look at the free cash flow generation, constantly increasing. Net income is great. So you got to start looking at stocks that are in the tech sector that have been broken down because they're about to rise. That is going to be the play. All the stocks that I've looked at, energy and all that, we've made our money. We made what? 73% from the recent calculation I had when I initiated a sell rating on BIREF. We got a 73 plus percent return. While everyone's losing their shirts in the market, it's always important to be a couple steps ahead. That's how you become successful in the market. You can't react to the market. You got to say, okay, after all these inflationary pressures subside, what is going to be the play here? What's going to happen, right? You got to ask yourself these, okay? Um, could Clover run out of cash this year? So, Clover could run out of cash and they could go ahead and do a share dilution. But remember, they are going to become profitable in 2023. Now, who knows? Vivek, if you follow my Clover Health videos, I did a video analysis of the CEO of Clover when he presented at a couple of banks. I don't know why I have my marker here. It makes me sound more intelligent. But all jokes aside, he said specifically that people are going to start to realize that Clover is actually a tech company, right? So I think that we may have actually booked a SaaS for Clover, and we'll see on Monday whether that pans out or not. But once Clover starts generating profitability and free cash flow, that's going to be under the umbrella of stocks that I personally own, that I love, and I will continue to dollar cost average. Market always recovers, ECA. People going to get exactly. You're going to go on CNBC and all of these folks saying, I'm out of the market. I'm out of the market. They're timing the market. And then, then when the market is in the bull phase and they're buying, they're like, well, you can't time a market. You just got to buy. It's complete chaos right now. So to all of our private Discord member groups that are part of the Owl Stock Alerts, again, we have a 3-day free trial, no risk to you guys. Please take a look at our algorithmic trading. For individuals that understand the algo flow, it is important, and there you go. People are using it. Right now, algorithms are dictating the market. This is where you're able to essentially come in and understand how and where a stock is going to head up to based off of where the algorithms want to take it. So based from the S&P 500, if you were to take a look at it really quickly and look up a 6-month, 1 year, 5-year, I would say people are looking right here, right on January 1st of 2021. They're thinking that the S&P will level off around 3,700. Okay, I doubt that it's going to go to 3,200. That's not going to happen. And if it does, that's going to be amazing. But I think that people are looking more at this line of support right here at $3,700 approximately for the S&P 500, meaning that we could be going down a little more, okay? Max fear has not set in. This is recession. Not necessarily. We need one more quarter of negative GDP growth to indicate a recession. In fact, based off of our metrics that I personally look at, our hedge fund information, this is for information that hedge funds use. If you go ahead and take a look, I know this looks a little complicated. I'll walk you through it. This is called this TCTM trend. It's a measurement system. And when it blinks red here, it's a signal that this is the composite recession model, which we had right there. There is a signal. Now, we don't have a signal for recession yet. However, we did get a composite risk warning model right a couple weeks ago when it was risk off. However, that has further subsided, and now we're looking more specifically at the long-term model, which is still bullish. If you look at the long-term trend model, we still see an annualized return of 11.3%, meaning that the market is still bullish. I know you might be looking at me like, what? Now, understand something though. If you do a change by change slope analysis, we are starting to fall below the line, which possibly indicates that the trend may reverse and we may enter a fully formed bear market. Now we're basically tiptoeing across a bear market. Based off of this data, I do not think we are headed to a recession anytime soon. I think the administration, the Biden administration, and the Federal Reserve is trying to prolong this recession. And I don't know if it has anything to do with politics or not. It's better that we get it over with, but they're prolonging it, which means that tech stocks may become the play at the end of the year and entering early to middle next year in 2023. This is what I'm projecting. I could be wrong, right? But this is what I'm looking at, and I'm taking in a lot of data, and I think that might be the play here. But again, not all tech stocks, excuse me, not all tech stocks are going to rise. There's going to be a disfragmentation between the haves and have-nots of tech stocks. Like, for example, if you look up really quick here, if you look up stocks like Wish, you can see that their revenue started to go down. This is not the type of stocks that you want. That revenue is going down. You want stocks, you see that line right there? And they're going down for a specific reason, but regardless, it's not a stock I want to own. They got negative 75% growth. I'm sorry, bye-bye, right? So stocks like this, I wouldn't touch with a like a long foot pole. However, if you compare, since we're talking about Clover, stocks like Clover, you can see a consistent, beautiful stepwise fashion, more like a freaking jump with 159% year over year growth. Now, I think it'll stabilize to around 50 to 80, but we'll see right now based off the earnings on Monday. Okay, so let's go ahead. If we already in a recession, horrible situation, and it will a couple of months, even Clove will get. Well, it depends. If it's profitable, then it's going to look good. Lying, they are lying. They buy in small amounts daily during these times. Absolutely. What's your average for Clove? Love your passion for Clove. So I personally I try to keep it transparent to a certain degree, but my average right now, I mean, last time I checked, I have it in multiple accounts, anywhere between, I would say, $3 to $5. It's different from different accounts, but my lowest is around 3 on one of the accounts. When you see Shrek come, you'll know it won't be lasting forever. Who's Shrek? But no market had faced 2 years of a pandemic. This is very unusual. You cannot explain just by looking at market history. Everything is so confusing. I could be wrong. Well, exactly. What's unpredictable here is the Russian and Ukraine problem. That is a problem with on top of a problem on top of another problem. You have the pandemic, inflation, and a war. And it's just, and then on top of it, you have political problems with China and Russia's trying to go back to the gold currency, the gold, style of money. So it's very tough. But overall, these are my projections because regardless of where the market goes, you can't take away the fundamentals from the business. If there are no fundamentals, if Apple wasn't selling phones, or if, let's say, Crowdstrike wasn't doing business with their cybersecurity software, they would not be on the stock market. They won't be in there. So the fundamentals of the business is what you pay attention to. And in the long run, they will get to that price target. So yesterday in our price target forum here, we initiated, and I made a video on it. It's a very detailed order regarding when to go in. I said it's heading to the primary 172 support. However, I am looking forward to 156. Now, if you look at CrowdStrike today, it did exactly that. It broke through the 170, 172, whatever, and now it's headed, I believe, towards that 156 support line, which is right there, right near where I believe the low for the S&P 500 is going to basically chillax, right around right there at $3,700. So I hope this is some good information. We are going to give you more with the market projections and economic projections, but I just wanted to give you, just from my own words, detached from all the data and all that, just my own words on what I feel about this market. Like when the SPY pumped during the Fed meeting, same thing will come again. Exactly. And that pump was shorts covering. Now, if you look at it right now, if you go into, I believe, stocks, and if you let's search the channel here. Let's see if I can find my bearings here. So I can't find it. Maybe it's general market. Yeah, it's general market. So we're gonna search, and let me just show you if you guys don't know. You guys can search specific channels. I'm just gonna search my own research that I did, and I want to look at the Fed rates back here. So before the Federal Reserve's meeting, the stock market was actually pricing in on April. And again, we have access to all this through our Discord. You can get it right here on a 3-day free trial. Literally, it's uh, I'm very proud of the platform we have. But if you look at it here, guys, we have a 75 basis point to one, and the chance of that was 94.9%. Now, I believe the market was overpricing this particular thing, even though from our cheat sheet, if you go down to our Federal Reserve predictions based off of our privileged cheat sheet, we've been mentioned a lot of 50 basis point hikes regarding all the voters of the Federal Reserve. Again, all access through our private Discord. Now, I think that once they raised it to 50 basis point hikes, I personally think that they went ahead and shorts covered, which is why we saw that short-term rally heading into this huge rally coming in the middle of Wednesday, and then doom and despair Thursday and Friday. Russian said no nuclear war today. A lot of people are sitting on the sidelines saying, yeah, right. Yeah, right. So I would say people would believe Russia once they stop the invasion, but it's great to hear that. I agree. If another share dilution, even safe for 12 investors, it will not become penny stock, you're quite confident of another dilution. Well, here's the thing. It's been depressed to a significant value. And regardless if it's a penny stock or not, again, I don't really look at stock price. I look at it when when I'm about to enter a position. I like to strategically go in, and at the time that I'm at, which is intraday, try to see if I can get the best deal, which I'm pretty successful most of the time because I use technical indicators. But what's interesting is that I actually look at the fundamentals of the business. And I know that in the long run, the stock price is going to be reflective of that, of the money that's going to be coming in. So I think that Clover is going to be making $5 to $6 billion in revenue in the next couple of years. And the revenue multiple, if it is and goes into its SaaS intrinsic value, would hover anywhere around to 5 to 9.7 times revenue multiple. And that is going to have a tremendous price action in the stock. And I doubt that it's going to be trading at $1 billion evaluation when they're free cash flow positive and their net income positive, and they have a revenue of $6 to $10 billion, but they are trading $1 billion. That doesn't happen, right? That doesn't happen. And that's 10 years. And this is me being 10, now 11 years in the market. I've never seen that happen. And if you guys have, show me a stock that is worth more than what it's been trading at, not in a bear market. And then I'm going to be a buyer of that stock. If you do find it, it's because they have a lot of liabilities. All right. Debt is what that means. What's your projection for Clove 2024? Do you believe you're in your projections? How confident in your calculations? I mean, maybe the people from the Mastering Stock Market course can speak on behalf of our calculations, but you guys can audit me. Let's go here to price targets, where the price targets are literally right over here. I mean, we hit this target here, February 11th. I said 750, BIREF, and it. Okay, I'm just gonna. And if you look at the stock, would you look at that? It just went ahead and we called it out here. Wait, no, we didn't. When the hell? We called it off. We called it right around this area here, and look at it now. Let's go in and take a look at other ones that we recently said sell. Twitter, back on February 10, before Elon Musk said he wants to buy it, I said price target 54. Elon Musk went ahead and said, I'll pay 54. And we did an intrinsic value calculation. We downgraded Netflix to $185. And this was when it was trading in the upper 200s. Now let's take a look at Netflix at $180. And here's our picture for Netflix. From 105 to 184. Look at that, right? D-Dog is hitting our price target of 140, initiated a sell. So the proof is in the pudding. I'm very confident within our platform. Now, if you want access to the actual mastering intrinsic value calculator, we've been featured on Bloomberg, MarketWatch, NASDAQ, Benzinga, Yahoo Finance, Yahoo Money, and a whole slew of reputable journals regarding our platform. Here's everything that we offer in our mastering. It is lifetime access. There's a coupon code SAVE50, which gives you $50 off. Here's our intrinsic value calculator. This is a really strong calculator. It's pretty much is able to find the intrinsic value of any stock that you want. But if you don't want the mastering and just want access to our private Discord, which has Brain Machine, which is able to calculate values more in the shorter term, we do offer a 3-day free trial. So I am confident in the calculations. The results, which you can look here, speak for themselves. And I'm very proud of what we created. So that's what I have to say there. I made 10K off SPY this week. Oh, that's amazing. Hell yeah, that is amazing. I like your passion towards gold. Yeah, no, and it's a really great company. I really believe in the company. They're doing great things, and they're doing something that I always like, which is be Republican with your money and a Democrat in your heart. So, be Republican in your mind, but a Democrat in your heart. Kind of take two forms of the best sides of both sides and then do business. And that's kind of how, honestly, majority of Americans feel that way. And I feel like that's how they operate. So their business model won't get attacked. And if they do get attacked, it's either from extreme sides of the political spectrum, meaning that it's healthcare stocks like these that tend to do really well during a recession, which is indicative right now, not a recession, but also a bear market, which is indicative. If you go to heat maps right now, you can see that healthcare is actually doing really well. And it's just that's drug manufacturing, but healthcare specifically is doing really well in comparison to the overall broader market. In the long run, SPY will see 500 and moves quickly. Oh yeah, for sure, absolutely. There could be some downturn, but I wouldn't. Do you like Lyft? They're sitting on. I need to take a look at Lyft. I haven't honestly looked at it. Just to kind of do a quick and dirty run up here. They're doing great with their revenues. A little 2019 hiccup. So 2020, because of the pandemic, now they're going back, trying to get to those pre-pandemic levels. Their gross margins are hovering around 40%. They've made it a little better right here. Operating margins are still trying to get less negative. Net income is still unprofitable, extremely unprofitable. Let's go here to Uber. I can't even spell Uber. If you go to Uber in comparison, their revenues are a lot more. They're around the same gross margins, operating margins still, net income. They're a lot better actually than Lyft. Free cash flow, again, still negative here. The financial health of the business, not so strong. But if you look at Lyft, free cash flow, again, it's right around their competition. And the financial health is a lot actually better than that of Uber. So, yeah, I mean, I would have to do an intrinsic value calculation. But the beautiful part about our Al Stock Alerts in our Discord here is what you can do and just follow me along here. Poria, I hope I said that correct. If you look up Al DCF and you type in Lyft, it should give you a price target of $21 for a DCF, and that's a shorter term price target. This is our Brain Machine, which is a proprietary algorithmic discount free cash flow calculator. Now, if you go in and take a look at Al Help and look up the help menu here, again, this is everything that we can do here on the Brain Machine. And if you want to take an average of what other analysts think of Lyft, you can look at the price targets and you can see there's a high of 82, a low of 25, and a consensus at 53 with a median value of 50. And if you go ahead and take a look at just analysts by their name to see where they're coming from, you can see here that we do have Morgan Stanley initiating a buy at $40 price target. Evercore 45. We got Truist Financials 50, RBC Capital 42, and this particular one, which I can't say,
Susquehanna.
So whatever that is, $25, and you can do that with any stock you want, and then you can go in and take a look at the actual support and resistance levels for, let's say, Lyft, just to give you an example here. And then that will give you kind of the support and resistance of where things are headed, right? So our platform is extremely powerful. I'm very proud of it. But in order to do the bigger calculation, it'll be the mastering intrinsic value calculator, which will take some time as I need to do and analyze all of the income statement, balance sheets, and statement of cash flows. So last question, and then I'm out. It's based on future free cash flow. I'm sure he would be the first to tell us, hey, we need to talk about this projection now that their numbers suck. Exactly. If Clover ends up not becoming the beast that we are projecting it out to be, then you guys will be the first people to know. I honestly, I'm so I'm thankful and I'm honored, but I'm also a bit worried. I think I photobombed Clover. I think I make so many Clover videos that it's just, and I can't wait for my original YouTube studio to come back online. We are creating an amazing, if you thought this was okay, we're creating a better one. So mind you, my apologies. Here are some paintings if you want to see some paintings, but my apologies on the background here. It's just, we're working hard and tirelessly trying to make the YouTube studio. It's just China's locked down right now, and a lot of my stuff is held back through supply chain issues. All right, so we are closing it off. Got 400 gain. Many people hedge, absolutely, but you got to be careful because once you are entering an extreme market by hedging, it gets a little bit worrisome because if you, let me see here, if there's like different levels of puts that we have access to, and if you're at a historically high levels of puts, then it gets a little bit tricky because you don't want to be too far into the extreme. Because right now we are in it. I have the diagram here. I have to remember. There's so many commands I have to remember it. But just going to our hedge fund information, if you look up fear and greed, we're so fearful right now. And I bet you if you look at the put and call volume, there's a lot of puts right now. And these are kind of like elastic or rubber bands. So you got to be careful with that. So there's that. So that's all I have to say. I hope this was a great talk. Again, just to re-summarize, I personally believe that the next 6 months of the stock market is going to be split on businesses that are actually growing during these inflationary times. In fact, DraftKings wants to be parcellated within that side of the business, saying, well, our revenue growth is not affected by these inflation times, right? But honestly, I'm more of a fundamental investor. I like stocks that are old school, and I think a healthcare company is pretty damn old school. And I believe that Clover is going to succeed in the coming months to years. Stocks like Crowdstrike, with the impeding gloom and doom of Russia, I believe cybersecurity and the threats that they impose on the rest of the world softwares like Crowdstrike and Palantir. More specifically, I like Crowdstrike based off of their free cash flow and just them being able to just literally print money, almost being a Federal Reserve of themselves, are going to be stocks that are going to be successful in the later half of 2022 and into 2023. Stocks that can't generate a free cash flow, that are unsuccessful, such as Wish, and that are down on their revenue and decreasing ever so lightly, as you can see here, are stocks that are forever going to remain in the penny stock level unless they change the fundamentals of their business. But overall, I'm very cautiously optimistic on the market. I personally believe, based off of our indicator, we are not headed into a recession, but a correction. But once we do get a composite recession model signal, you will be the first to know. And we will be giving you different points of entries along that, and as well as risk off periods based off of our hedge fund institutional access to the most quality of information in the stock market, utilizing over 100 years of information. That's all I have for you today, folks. It is a privilege and honor, and I will see you on the next one.